Hello traders, welcome back to my channel. Today I will discuss an NQ long setup which was on the 24th of July. I shall like always explain how I determined my bias for the day, key liquidity points that I have marked on the higher time frames, and I shall go down as well to the lower time frame, which is the 1 minute for the entry. So let's start first by deciding how I determine my bias for the day. So currently we are on the 4-hour time frame on the NQ. We have this bullish movement here that I marked, and for me that bullish movement, which also made a break of structure here where this line is marked, that for me determines that the 4-hour time frame is bullish, so I will only look to long. So now that the bias is decided, I will mark the key liquidity point that I'm interested in on the 4-hour, if there is any, and also on the 1-hour. So let's delete this one here. So, from this bullish movement on the 4-hour, there is nothing that I could have marked. So, of course, like as there is nothing, I will drop down to the 1-hour and see how price it is on that particular time frame. So, here is the same bullish move, but on the 1-hour time frame. As you can see here, in the circle, there is like a small consolidation on the 1-hour time frame. So for me, the lowest point of that consolidation is a point to be marked, because in my opinion, price will go below that point there, and it can offer us a reversal. So let's delete it. This is the line that I have marked here in the 1-hour, which goes all the way to the right till here. So the price movement that I will be discussing today is this one here, but before I discuss that part, I want to take you to a walkthrough of how I decided to take that long from there. So back again on the 4-hour time frame. So when price went below this 1-hour liquidity point, as you can see, it made another bullish movement here. It's always the same. We start with the bullish movement, even like when I explained on the lower time frame entry, we start with the bullish movement, but this time, as it's on the higher time frame, it is still the same. So again, price grabbed the liquidity from the 1-hour key liquidity point that I have marked, grabbed the liquidity and made a bullish move. After that bullish move, I will drop to the 1-minute time frame this time, because price when I woke up was already at this point here. So of course I have to drop to the 1-minute time frame. I will tell you why. So I will keep this marking here of the bullish move, and I will drop on the 1-minute time frame now. Let's locate the lowest point. This is the whole bullish movement that I have shown on the 4-hour time frame. And in this part here, the only thing that I'm interested in is these two candles here. 1 and 2. Why? Because that 4-hour bullish movement, price will retrace, go below these two candles, and once price goes below these two candles, I will look for a reversal entry. It's always the same. Like usually I explain to you that while on the 1 minute time frame we look we plot the fib, we let price go below the 61.8 and below the bearish candles of the starting move of the bullish movement, and after price takes the liquidity we take the entry. And this one is exactly the same. Price made that bullish move on the 4 hour and we locate the lowest points, of course bearish candle because it's a bullish move, and we mark their low. So let's mark their low. We extend it to the right. So that's the first one, and this is the second point. So when price goes below the liquidity of these lines that I have marked, an entry could be taken, but then you need to see if a high bullish volume candle is made, or else there is an IFVG that got filled, so stuff like that. We can delete this air glass, we don't need it anymore. And also notice it was Friday 7th of July and the line had to be extended and price went below on the 23rd of July, Thursday. But here there was no entry which hit my criteria, so I took no entry here. Again, the next day, this is the most important thing. The point where I took the long was here. But why I took the long from there? So, as you can see, price took the liquidity from here. It made a bullish move, again a retracement, and again a bullish movement. So the only 2 points that are eye-catchy for me, and I want price to go below and make a bullish candle or an IFVG, are these 2 points here. The point of the second leg, the lowest part, and also the point right here. So both of them were taken, and as you can see, if you maybe trade the Asia session, this point here was good for you to take an entry long. Why? Because price took the key liquidity point of that bullish move, and immediately after taking that liquidity, an IFVG was filled. Once the IFVG gets filled with a high volume candle, a bullish high volume candle like this, the long setup could have been taken. And as you can see, you could have made 2.5 R easily. You could have made the 2.5 easily. I usually close at 2.5 R, so I will explain this setup based on the 2.5 R. So the Asia session was a really good one to take a long setup from. But during that time, I am not in front of the computer. As I woke up, I was right here, price was right here. So again, the same thing. We plot the fib. And why we plot the fib? So we mark liquidity point below the 61.8 of the fib, which we have this one here, this one here, and this one here, and we can delete the fib. So if you didn't catch the Asia session long setup, you could have waited the pre-London session to grab a 2.5R. Why? How? After price goes below this liquidity that I have explained earlier, it made another bullish move and then retraced. So this point here, it was not good to take an entry long because it doesn't match my entry criteria. Why? Because after price took this liquidity here, went below the line I have marked, it didn't make that bullish candle that I usually look for. It just made this candle here, which for me it isn't much valuable. So the entry I don't take. But again, prior the London session has opened, price took the liquidity here. If you decide to plot this price section on your chart, you will see that this point here with the arrow is a little bit, just a little bit lower from the point that I have marked here. And once price went below just a little bit the liquidity point that I have marked and formed this bullish candle, not this one here because it isn't much of a bullish candle, but this one, which is definitely a high volume bullish candle, it really catches my eye. It attracts me to take the long setup from there as everything has matched. That was the long setup that I took last Friday, which made me around 2.5R. So the entry is there, the stop loss, like always, we make it below the low of the bullish movement, which is right here, and I closed the trade at 2.5R, which was right here. To be honest, when I saw that the 2.5R is like also a structure take profit because it targets this high here, it was a little bit like 2.446, and I left it run just a small bit to take the full 2.5R. And also because it is a Friday, I love to, if the setup criteria matches everything and I take a long or a short, I love to take it during the London session, because then after New York Open, the market on Friday likes to consolidate a little bit, and so on Friday, especially on Friday, I love to close the charts really early. So after I took this setup, I just closed the charts, and that's all. I kept on seeing the charts, but even if this setup confirmed later on another new setup, I wouldn't have touched it, because on a Friday New York session, I don't find it really good for me. But so for today's setup, that's all. Just a quick recap. We start from deciding the bias for the day. As I have shown you earlier, we mark key liquidity points on the 4-hour and 1-hour, and once price goes below that 1-hour or 4-hour liquidity point, we look for the bullish movement. Once the bullish movement is done, we mark price action below the 61.8 of the fib, and also any point that is really eye-catchy for us, and then we wait for price to go below it and mark, and then we wait for an IFVG or a high volume bullish candle for an entry setup. This price action that I have shown you today was a little bit different than usual, because the setup, there were not like few hours for the setup to form, but days. So we need to be extra cautious when taking this type of setups, but eventually, as you can see, if one trades the SGS session, there was a good trade. And also, if one happens to trade also the London and the pre-London, there was also a good setup, like the one I have showed you, which would have gained you a 2.5 R. So it is really a simple strategy to learn. I think I have shown like around 6 videos for now, because I'm still at the beginning of posting on YouTube. But it is a really simple setup that works, and of course it's all free, so you have nothing to lose. You just need to be patient. So for today's video, that's all. I hope that you liked and learned something from it. If so, please leave a like, comment, and subscribe to the channel. Thank you for watching, and I'll see you on the next one.